Welcome to the deep dive. Look, if you're trying to make sense of the crypto market right now, I get it. It feels like trying to read a map in a hurricane, doesn't it?
Right.
You've got signals screaming extreme fear from one direction, and then boom, incredible growth numbers popping up elsewhere. It's confusing.
It really is.
So our mission today is simple. Let's cut through that noise. Let's stop feeling overwhelmed and just focus on the few signals that might actually, matter. And right now, the big indicators like sentiment, they're still showing elevated caution, even extreme fear, generally dominating sentiment.
Yeah, and that's exactly why this is so interesting when you dig into the sources we gathered. It's not a story of just everything collapsing. If you look closely, you start seeing these pockets of really intense but selective optimism. We're finding confidence bubbling up.
Where specifically?
Well, specifically with institutional money flows, certain groups of Ethereum traders, and maybe most surprisingly, in the performance of a couple of altcoins, Zcash and XRP. So we're going to unpack those areas where strength seems to be emerging, looking at the numbers, sure, but also the risks hiding underneath.
All right, so drilling down into where confidence is actually showing up despite all that market fear, we're tracking the money, the capital flows, and then asking if these altcoins showing crazy growth have, well, if they have the legs to stand on. Okay, let's unpack this.
Sounds good.
Let's kick off with that first kind of isolated pocket of optimism we found. It seems to be coming almost entirely from Ethereum traders.
Yeah, according to Santiment, they've suddenly turned pretty bullish, which really stands out against the risk-off behavior you see almost everywhere else right now.
And what's really fascinating is the sources pinpoint a psychological trigger, a very specific one.
Oh, yeah? What was it?
This shift, it happened precisely as the ETH price was climbing towards $3,500. It seems like for these specific traders, crossing that line was a clear recover signal. Like, flipping a switch from maybe this recovers to, okay, let's go. Right, a psychological marker. But hang on, if the broader market is still stuck in extreme fear, why would Ethereum get a pass like that? Does this isolated confidence mean anything for the rest of the market? Like, is a big rally coming?
That's the million-dollar question, isn't it? And the data we have suggests, well, caution is probably warranted. This ETH optimism seems very selective. It isn't generalized, the rest of the market. Still showing clear signs of risk aversion.
So not a tide lifting all boats just yet.
Not yet. So for you listening, the confidence we're seeing with Ethereum, it really needs confirmation. It's not enough on its own. We need to see sustained changes, like more capital actually flowing in or big shifts in open interest on derivatives markets. That would confirm a broader upward trend. And if the bigger picture worsens, bad macro news, more regulatory crackdowns that ETH confidence could just evaporate, poof, gone as fast as it appeared. It feels fragile.
Okay, so for anyone positioned in Ethereum right now, there's a clear technical level to keep an eye on based on our sources. That support zone is roughly between $3,500 and $3,300.
That's the range, yeah.
That range is basically your stability gauge. If price breaks down below that, maybe that trader confidence breaks down too.
Precisely.
All right, enough about feelings and sentiment, even though it's important. Let's talk hard cash, the actual money moving. This is where we saw that other big sign of potential relief, institutional capital. Specifically, money coming back into the Bitcoin spot ETFs.
Yeah, this is significant.
Because we had been watching a really worrying trend develop, right?
Yeah.
6 straight days of massive outflows from those ETFs. It added up to almost $1.4 billion pulled out. That looked like institutions were, frankly, running for the hills.
It definitely raised eyebrows, but the reversal, that's why we're calling this selective optimism. On one particular Thursday recently, those same Bitcoin ETFs, they clocked a net inflow of about $239.9 million.
Wow. Okay.
That single day completely snapped that outflow streak.
Did we see anything similar with Ethereum ETFs?
We did, yeah, although much smaller scale. A parallel reversal. Ethereum ETFs logged about $12.5 million in inflows after they also had 6 days of outflows.
So that big slug of institutional money, the $240 million coming back into Bitcoin ETFs, that matters because institutional money tends to be stickier, right?
Right.
More stabilizing than, say, retail speculation.
Generally, yes. It indicates renewed interest from bigger players, which can bring more stability. But, and this is a big but, one positive day doesn't automatically undo a week of outflows or guarantee prices are about to explode upwards.
Right. Context is key.
Absolutely. broader market conditions, overall liquidity, general macro sentiment, those things still hold a lot of weight. So the critical thing for you to watch now is whether this inflow is sustained over the next few days, or if it was just a momentary relief rally, some dip buyers stepping in once. We need to see if the institutions are really back, or just testing the waters.
Okay, monitoring those flows is crucial then.
And here's where it gets really interesting, because the action isn't just confined to Bitcoin and Ethereum.
Okay, let's talk altcoins then, because yeah, we saw some truly eye-popping growth numbers there. The real standout in the sources we looked at was Zcash, ZEC. Not always the coin-grabbing headlines, but it just muscled its way back into the top 20 by market cap.
Quite the comeback.
And not just that, ZEC hit the $600 range, the first time it's been there since way back in 2018. That's a massive historical marker.
And the growth metrics behind that move are pretty wild.
Tell me about it. We saw year-over-year growth smashing past 12,270%. Its market value is pushing towards $10 billion.
Wow. So the natural question is, what on earth is powering an older privacy coin like Zcash to these kinds of levels now?
Exactly. What's the story?
It seems to boil down to a combination of about three things, mostly related to actual use or utility. First, there just seems to be a general renewed interest bubbling up across crypto and dedicated privacy infrastructure. People are thinking about that again.
Okay, privacy narrative returning.
Seems like it. Second, the Electric Coin Company, the folks who maintain Zcash, they've apparently rolled out some significant technical upgrades recently, which have been noticed. And third, there's been tangible adoption growth for their specific wallet called Zashi, so tech improvements plus user adoption.
So it feels like the market is actively looking beyond just Bitcoin and Ethereum again, searching for projects with specific utility, like privacy.
That appears to be the case. It suggests themes like privacy tech are definitely back on the investors' radar.
What, 1,270% growth? That kind of explosive move has to come with a massive side of risk.
Right, oh, absolutely, no question. While ZEC is offering what some sources are calling explosive potential gains, it definitely carries a profile of much higher volatility. And probably a greater risk of a really sharp correction compared to the relative stability you might see in Bitcoin or Ethereum. It's classic high-risk, high-reward territory.
Got it. High risk, high reward on ZEC. Now, speaking of complex risk profiles, let's shift gears to the altcoin that probably gave us the most contradictory signals, XRP.
Yes, XRP. A very mixed bag in the recent data.
Right. The network activity metrics, they look fantastic on the surface, but then the financial metrics seem to tell a completely different, less rosy story. Let's start with the good stuff.
Okay.
We saw really strong network growth on the XRPL, the ledger, something like 21,000 new wallets registered recently. That usually suggests a healthy inflow of new users.
That's a positive sign, typically.
And then stablecoin metrics just exploded upwards. Right. Stablecoin capture on the XRPL jumped 44% in just one week. They hit a record high value of $307 million in stablecoins sitting on the network. That seems like real liquidity pouring in.
Record liquidity. And that's where the story gets complicated, because here's the massive contradiction that should probably make anyone looking at XRP pause.
What is it?
Despite those really strong positive signs, new wallets, record stablecoin liquidity, the total value locked, or TVL, on the XRPL actually fell by about 6% during the same period.
Wait, hold on. How does that even work? New users are showing up, bringing more stablecoin cash, but the total value actually committed to the network drops.
Exactly. It's a huge conflict in the data.
What does that tell us about what those new users are actually doing? What's their behavior?
Well, it tells us something potentially quite important about the type of investor or user who might be arriving. For you listening, think of TVL as the stickier money, the long-term committed investment.
Right. Money locked up in DeFi protocols or infrastructure.
Precisely. So if new users are arriving and bringing stablecoins, but the TVL is dropping, it strongly suggests they aren't interested in locking that money up for the long term.
So they're not investing, they're trading.
It seems likely they're more focused on, let's say, rolling positions or quick, short-term speculative transactions rather than making fundamental long-term investments in the ecosystem.
Ah, okay. So connecting that back, it implies maybe the accumulation we're seeing is purely speculative hype, not based on fundamentals. Raises a bit of a red flag about how sustainable that growth is.
It definitely raises a question mark. And adding another layer of technical risk here, the funding rates for XRP recently flipped positive.
Funding rates. Remind us what that means.
Sure. Positive funding basically means longs pay shorts. In simple terms, a lot of traders are currently paying a premium to bet that the price of XRP will go up. They're heavily positioned for a rally.
Okay, so lots of optimism baked in.
Yes, but that creates the classic risk of what's called crowded longs. Too many people are already on the same side of the boat.
Right, which makes it vulnerable.
Extremely vulnerable. If the price dips even slightly, it can trigger cascading liquidations of those long positions, leading to a sharp, sudden correction downwards. A long squeeze.
Okay, so for XRP, the key question for you, the listener, is whether all that exciting network growth and stablecoin inflow is the start of a genuine, strong appreciation cycle that can push through resistance. Or if it's just a temporary, speculatively fueled boost that's vulnerable to getting wiped out when those crowded longs eventually unwind. A tricky picture.
Very tricky.
All right, so we've kind of surveyed the battlefield here, the overall market.
Yeah.
Still emotionally cautious, seems anchored by that extreme fear reading, but that caution is definitely being pierced by these focused points of light, this selective optimism we've talked about.
Exactly. You've got the ETH traders reacting almost purely to price levels, hitting that $3,500 mark.
Then you've got institutional capital, potentially reversing course, shown by that big inflow day for Bitcoin ETFs.
Right. And then these high-risk, high-reward dynamics playing out in specific altcoins, like the utility story driving Zcash, and the more speculative excitement around XRP.
So boiling it down, what are the key signals people absolutely need to keep their eyes on going forward?
Okay, I'd say two main things based on these sources. First, those institutional capital flows via the ETFs. You need to watch if that one-day reversal turns into a sustained trend. That's critical.
Well, just one day's data point.
Way more. And second, keep an eye on any continued growth in these specialized utility areas, like the privacy focus that seems to be boosting ZEC, or that fundamental network adoption we saw on XRPL. Even with the TVL caveat, utility matters.
But the big warning label remains.
Oh, absolutely. The crucial warning is the same. These positive signals, they're useful for validation, maybe for building confidence, but they should not be read as some kind of guarantee that we're automatically in for a smooth, sustained rally across the board.
Volatility is still the name of the game.
It's not just present, it's basically expected, especially when you venture into the altcoin space where that risk of really sharp corrections is just fundamentally tied to the potential for explosive gains. You don't get one without the other.
So what does this all mean? I guess it means success in navigating this market depends on really monitoring that specific combination of factors, the capital flow, the shifts in sentiment, the technical developments.
Yeah, it's about trying to understand the moment as it develops rather than assuming you're riding some guaranteed, predictable trend, because that doesn't seem to exist right now.
Always reading the room, basically.
Yeah.
Okay, before we wrap up this deep dive, here's maybe one final thought for you to chew on, building on this tension we've seen between stability and risk.
Okay.
We've established there's selective optimism around ETH and potentially a major reversal starting in institutional flows for Bitcoin ETFs, the relatively safer end of the market. Now imagine if global macro conditions wobble or some tough regulation hits, causing those institutional inflows to stall out or even reverse again.
A risk-off shift.
Exactly.
Yeah.
If that happens, which of those high-risk, high-reward altcoins we discussed, Zcash, driven by that utility and privacy narrative, or XRP, driven more by speculative excitement and those crowded longs, which one do you think would feel the correction fastest and maybe hardest, and why?
Ooh, that's a good one. Utility versus hype in a downturn.
Something to think about as you continue to navigate these really complex, really nuanced market signals.
Definitely food for thought.
Thanks for diving in with us today. We'll catch you on the next one.